So we got a beat from Bank of Montreal in its latest quarter, even though the provision for credit losses topped 1 billion, actually almost 1.1 billion, up from just over $700 million a year ago. And National Bank was also ahead of estimates in its latest quarter. That stock off its record highs, still ahead 13% in the past year. Once again, National Bank's results were helped by its relatively big capital markets division. Let's get more from David Burrows, Chief Investment Strategist at Barometer Capital Management. Great to see you.
Good to be here, Andy.
Off the top, any reaction to the Bank of Montreal numbers?
Yeah, look, I think in general they were fine across all their business lines. Earnings came in a little ahead of estimate. Loan losses were fine. I mean, they did have a little write-down for a card portfolio they sold in the U.S. But in general, I think all of the lines were good. And it's a good read, for other earnings coming up. National, I thought, again, capital markets, excellent. And that's been a solid theme across all of the major banks.
So let's put up National Bank stock because they are digesting that big acquisition for them, Canadian Western Bank. Yeah. Canaccord says it appears to be going well.
I think it is going well. I mean, it was a big price they paid, but this bank is got great organic growth all the way through, so they should be able to digest that pretty well and put it to their advantage.
Nvidia, that's going to be the story after the markets today. What are you looking out for, David?
Yeah, look, I think everybody expects the growth numbers to be pretty strong. I think something like 66% revenue growth and about 50% earnings growth. That is decelerating a little bit.
How much revenue growth?
66%.
Wow, from 66. Such a high base already.
Yeah, from such a high base.
Yeah.
And so it has been an amazing story. It has decelerated a little bit. It'll be too early to see if they get much of a bump from the reduction of the restrictions on global sales of chips into some countries that have been restricted, like China, for instance. So it'll be interesting to hear commentary on maybe new order flows that have been coming. But remember, semiconductors sort of topped out in April of last year and have been digesting, the big run that they've had over the last few years. The group came back from way above its long-term moving average and tested it in this most recent sell-off. And so, we'll see if they can regain some sort of leadership characteristic.
You are big in financial stocks generally. We'll get to a couple of your ideas in a moment. And I think that's a position you've had for a while, David.
Yeah, our big belief is we are in a more inflationary environment. And no matter which way you slice it, policies at the governments are to continue to spend money. Lots of discussion about cutting spending in the U.S., but it doesn't seem to be appearing. And the big, beautiful bill isn't going to help things much. So I think when we look at the things that are leading the market, they're all things that do well in a more inflationary world. Investors are hedging themselves, and financial services companies do well in that environment. And we're seeing it everywhere in the world. It's one of the reasons that global stocks have been outperforming U.S. stocks, because the financial services sector plays a much bigger part in, say, the MSCI All World ex-U.S. index. You've got markets around the world hitting new highs daily. U.S. not yet back to highs.
I guess America has such a huge tech sector for one thing.
That's right. Yeah. And it has been a drag over the last 8-9 months.
You are light on utilities or kind of avoiding utilities and real estate. Those, of course, are sectors that do well when interest rates drop.
Right.
So you see rates not falling that much?
We think that from 1981 to 2020, the power was in the hands of the borrower because the cost of money kept going down. And since 2020, the power's been in the hands of the lender because the cost of money is going up. So if you're a company that needs constant financing or has financing, with the cost of borrowing going up, it makes it tougher. You need growth in cash flow and growth in dividends to offset, a rising cost of living. So we've been more focused on dividend growers than those high dividend, low growth companies.
JP Morgan and Morgan Stanley are two of your favorite financial names.
Yeah, I just think JP Morgan is the best bank in the world. It's been a holding for us for a long time. Well-run, great capital markets business, great technology platform. Morgan Stanley, interesting, if you look at the financial subsectors, the investment, the capital markets banks really are leading. And Morgan Stanley's had a great charge off the lows from early April, as has JP Morgan. and relative strength versus the rest of the market has been improving. Probably tells you something that the environment for stocks is not that bad, because financial services and capital markets should be giving you a read on sort of investor opportunity.
Fairfax has been hitting record highs in Toronto. Would you put new money in there?
It's been the biggest position at the firm for about the last 2.5 years, and it's just been dynamite. But the property and casualty companies have been able to continually harden the prices they're charging, and their investment portfolios are generating great returns. And Fairfax has done a great job with their investment portfolio. They're a mini Berkshire Hathaway. In fact, they've outperformed Berkshire since about 1985 by a wide margin. Just
finally, we're tight for time. You have two aerospace and defense names for us, Howmet Aerospace and General Electric.
Yeah, look, we have had very solid order flows for defense. And of course, with some of the things going on geopolitically, the defense orders are rising dramatically around the world. European defense companies doing amazingly well. Howmet makes like fan blades that go into jet engines and a number of other parts in that area. And because GE has been slow in delivering their new series of jet engines, the suppliers of parts into this market have been doing remarkably well. Howmet's been a great performer.
David, thank you very much.
Thanks for having me.
David Burrows, one of our regulars. How long have you been coming on BNN Bloomberg?
I think the first time was before it was called Bloomberg, 2000, midway through 2000, the beginning of the tech crash.
Oh, my goodness. David, thanks very much. As ever, our guest has been David Burrows, President and Chief Investment Strategist at Barometer Capital. Up next,